I'm currently in a short position on EURAUD on the 4-hour time frame. I'm going to show you how I entered this position using market structure, which Aaron teaches on the TPM channel, and I'm going to show you how this has confluence with market Cipher B as well. So firstly, I'm just going to talk to you about the structure. We had a higher low in an uptrend that created a higher high over here, and when we were coming off of that higher high, we had a bearish candle body closing below the most recent higher low. That is indicating to you that there's potentially a bearish shift, and we are now going to be looking for short positions from this point onwards. We only want to short lower highs in a downtrend. So from our lower low, we need price to retrace at least to the EMA to give us some sort of confluence. And then we are looking for a lower high. Again, Aaron on the TPM channel is teaching that there are certain turning point candles that lets you know that you are at a lower high in a downtrend. And one of them is the bearish engulfing candle. So that is letting you know that the lower high in the downtrend has been put in, and you could have entered that trade. The next type of candle that you can enter is a sweeping candle. This is the entry that I took in the downtrend. So I've just waited for this 4-hour candle to close, and I have entered on the open of the next candle and swung the high of this 4-hour bearish sweeping candle at the lower high in the downtrend. And what I want to show you with market Cipher B is that there is still confluence with this market structure method, and what I've always been wanting to do, which is entering on the wicks of daily or weekly candles, because that is my preferred higher time frame. All right, so I am going to go down to the 15-minute time frame. So firstly, these white horizontal lines demarcate the daily open price level. So with our strategy, we want to be entering above the daily open, or at the very least at the daily open, in order to catch the top wick of a daily candle, because we are shorting. So those of you who know my market Cipher B strategy, I usually use the 15-minute overbought wave. So this wave is above plus 60. It is overbought. I use that to determine that we are perhaps putting in the top wick of a daily candle, and that is when I would enter my short position. So you can see that the TPM turning point candle is catching the same entry as the overbought wave on market Cipher B. We are catching the top wick of a daily bearish candle because we are shorting. And that's all you ever really want to do. Here's a simple illustration. Let's say you have had one bearish daily candle close. You are hoping that the consecutive candle is also going to be bearish. And all you want to do is get in on that second candle to continue with that momentum, either at the open or the top wick of that candle, and ride that bearish momentum. So that is what we're trying to achieve, but this is through the lens of the 15-minute time frame. All right, so I've just gone back to the 4-hour now to show you that you want to be entering again at that bearish sweeping candle or the bearish engulfing candle, and that is catching your top wick on a bearish daily candle to ride that bearish momentum in a downtrend. So what we're targeting is the lower low. We want to put in a new lower low. In order to do that, you need a candle body to close underneath this lower low to put in that new structure. How do I marry that up to market Cipher B? Usually a higher high or a lower low is going to be your anchor waves. This is at the start of a trend, so it doesn't look that way. But you can see at the top of the structure, you're getting anchor waves or anchor divergences. And your lower high, which is your re-entry in a downtrend, is going to be your trigger waves. Just as you can see that your higher low in an uptrend is also usually a trigger wave, right? In this case, it was a VWAP entering you into that position, but that's usually how it marries up. I can confidently say that it is highly probable that when we get a 4-hour candle body closing below this lower low structure to take profit on our current short position, this 4-hour wave is likely going to be at the negative 60 level or beneath that level. So it's going to be oversold. So the new lower low is going to be an anchored wave. That is how you marry up structure with market Cipher B. And I'm just going to let this position play out. The P&L that you can see on the screen is live. It is coming through with an overlay from MT5. Shout out to Lord Hades for putting that together for me. If the integrity of the structure remains true, it will put in a new lower low to maintain the downtrend. So I just want to show you a few things before I come back to the chart, and we can see how the final setup played out. I just want to show you that I was still catching the top wick on a daily candle. There it is, you can see I'm catching the top wick on the daily candle, even though I've entered it with the assistance of the TPM turning point candle at a lower high in a downtrend. But using the confluence of market Cipher's trigger wave on the 4 hour is showing us that we are at a lower high in a downtrend, and then also that the overbought wave on the 15-minute time frame is also showing us that we are catching the top wick on that daily time frame. I will let this play out for a bit and come back. We're going to get the 12-hour candle close in about 2 hours. So usually there will be quite a decent retracement. The 12-hour can come all the way back up to the EMA before then playing out. So it could still maybe be a day and a half. All right, London's just opened. So I've come back just to show you how London's pushing it at the moment. London's only been open for 4 minutes. So it's not, hasn't been that long, but it's pushing it closer towards the lower low level. And I just have 1K risk on the trade. So if it does go to I take profit, it's just going to be 4,800. That's 0.5% of the account being risked on this one. Okay, so it's Wednesday morning now. You can see that we almost took profit. We did have a candle body closing under the level. It was a very tiny, sort of like a doji type of candle. So I'm hoping that we will still come back and break this level properly. All right, so I'm still in the trade. We've been holding the trade the entire week. So from Monday, and now it's Thursday, 7 p.m. It's actually 8:30. And in 2 hours, we are getting the ECB interest rate decision. We have got the trade at break even now. I've moved the stop to break even, so we're in a risk-free trade. So it's either going to take profit or I'm going to get stopped at break even. It's Saturday at the moment, and this is how the week has ended. So the position has not yet stopped me out at break even. It has not yet taken profit. I'm going to keep on holding the trade into next week, and whatever will be, will be. Thanks for watching, guys.